August and September and unemployment inching towards 10%. The question on everyone's mind is, how can we create new jobs and create them pretty quickly? Joining us now is John Berlau from the Competitive Enterprise Institute. We also have CBC's Steve Leisman with us as well. Thanks to both of you for joining us. John, let me ask you, where do you think the jobs are going to come from in this recovery?
I think we have to look at government policy as far as we have to move away from the government trying to create jobs with more stimulus, and instead, Melissa, lifting the barriers to private sector job creation. Things that raise the cost of capital for innovative businesses, like the Sarbanes-Oxley Act with its accounting mandates, and make it so hard to go public with all the accounting costs.
Steve, isn't the argument against that always that it's going to take too long? One of the arguments.
Most certainly. I mean, it's a very delicate balance to get the government intrusion into the private sector right. What you want to do is have a series of programs that are enough to kind of ease the transition from unemployment into employment. And this is a particularly pernicious downturn in that regard, Melissa. When I was looking at the data, the amount of the average duration of unemployment, 26 weeks. We've gone back to 1985 when it comes to the participation rate in the job market, and men are leaving the workforce in numbers that create huge issues that are going to have to be dealt with, Melissa. And I'm not sure that policymakers right now have really begun to think about the kind of dramatic changes that are here that look like some of them at least could be permanent.
John, what about that?
I really do share Steve's concern. You know, they say unemployment is a lagging indicator in a recovery, but I think it's lagging more than it's need to. My colleague at Competitive Enterprise Institute, William Yeatman, and I have just written something on CEI.org that talks about things from Sarbanes reform. And, you know, there's new studies from the University of Pittsburgh showing that it's cutting right into research and development, which would create the jobs in the future. Companies are spending on accounting costs, what they could do on R&D. And also just things like lifting barriers to drilling in the outer continental shelf or nuclear power permitting, you know, could create like 1.5 million jobs, according to some studies.
You know, there's something I think the Obama administration could do now, or at least in a relatively short period of time, that would help create jobs, and that's to decide what it's going to do on the back end of these huge deficits. I think it needs to come up with a plan so that businesses, and small businesses especially, know what the game is going to be. If taxes are going to be higher, how much higher? How much is it going to cost me right now for a period of time to bring a new employee on? I think there are two pieces of damage here, and one, the uncertainty is worse than the second one, which is the actual level of taxation that will be charged.
John, that's the truth, right?
I think so. There is a lot of uncertainty. Will the tax rates go back up? What will be the cost, you know, from health care, from energy rationing and cap and trade, cap and tax, and all of those things, plus some of the existing barriers that exist.
Yeah.
And they're looking at future barriers, and employers are uncertain, and that is a big part of it.
Is it possible to have a jobless recovery? I mean, let me ask both of you. We keep hearing that that's what's going to happen, but how exactly does that work? If you don't have jobs, you can't go out and consume. Steve, how does that work?
The problem is there's two pieces here right now. First is there's the payroll survey and the household survey. And the trouble is everybody follows the household survey. That gets worse in part because things are getting better. People come back into the workforce. I would be following the payroll survey as the one that we survey establishments, as the one that does a somewhat better job of saying where things are going. And in fact, I think, Melissa, my take would be that the market took that as a bit worse than it actually was. If I take out the unexpected decline of 50,000 in government workers, I come up with a 216,000 decline in the private sector workforce, and that is statistically insignificant from the 175 that was expected by economists on Wall Street.
Yeah, but I mean, a lot of it is emotional. It's that reaction, that number being bigger than expected.
You're absolutely right.
And you know, you expect government jobs to continue to increase since that's where the money is going. To see that
but that's just a reality, Melissa. That we have to get used to the budget reality out there, which is states are going to be shedding workers and they're going to be downsizing.
John, one thing I hear from people over and over again is we haven't fixed the fundamental problems that got us here in the first place. Like, how can we have a recovery when, you know, we still have so much unemployment, we still have a mortgage mess, we still have a real estate mess? What would you say to something like that?
I would say that you can't have a sustained recovery. You can have a recovery where unemployment's a lagging indicator, but you can't have a sustained recovery where you've still got unemployment near 10%. And I think you do need to fix things like Sarbanes-Oxley, which did nothing, was passed, rushed through after Enron, did nothing to prevent the financial crisis, but is still keeping is still hurting legitimate entrepreneurs. And we've got a case, the Supreme Court case that we're involved in, is going to hear this year on it.
But Steve, what's the chicken and what's the egg? I mean, does the economy start to get better so we see unemployment get better, we see the housing situation get better, or do those things have to get better for the whole pie to get better?
I think that unemployment is, in fact, a lagging indicator. I think what's going to happen is the economy will improve and jobs will follow it. The truth is, Melissa, and this is shocking for television, we don't know why the past two recessions have been jobless. Nobody has really set out and put out a convincing set of reasons why. Remember, when we used to have recoveries, jobs used to come along with the recovery and follow much more closely to GDP. The last two downturns were outliers in that regard, and the fact is we don't understand why.
We don't understand why, but it still happened. We
Somebody
still
needs
recovered,
to figure it out.
Even though jobs were lagging, we still recovered.
We still recovered. That is correct. Right? Otherwise, we would perpetually.
Right.
Otherwise, we'd be perpetually in a recession. It's what happens to the 90% who are employed that is the ultimate determinant of the outcome here.
Okay, we'll leave it there. Steve, you go figure out why that was and come back.
Right to work on it.
Thanks, guys. We appreciate it.
Thank you,
Trish.
Melissa.
He's a hard worker, that Steve Leisman.